What's up, guys? This is Cole with the Brantford Exchange. Today I'm going to show you how to use the RSI indicator. What does it represent, how is it going to help you trading, and how we use it here at the Brantford Exchange when we trade stock. So it's this first indicator right here, this big one. I kind of have it zoomed in right now so that you guys can see it a little bit better, but it stands for the Relative Strength Index. And basically what it shows you is if the stock is more overbought or more oversold. So when a stock is more overbought, that means that you can be expecting a sell-off, and when it's more oversold, it's a better deal, so you can be expecting people to buy it up, and you can expect the price in the stock to rally a little bit. And you can see that here if we look. Traditionally speaking, people analyze the RSI on, they have their overbought at 70 and they have their oversold at 30, and you can see that here on mine. If you look at, right here at 70, and then there's the line here, and that's the overbought line. As you can see, when the RSI, this line crosses over that, it gets red because it's overbought, and then down here at 30 where it's undersold and the line is there, when it crosses under that, it turns blue because it's oversold. So how that helps you when you're trading, though, is when you're watching it, you have a better idea of if it's a good buy opportunity for you or not. Because obviously, if the RSI, like for right here example, it's red, it's peaking out over 70, which means that it's overbought, and you can see the stock had a bit of a pullback because it was valued too high, it was overvalued. So you don't want to buy a stock right there. If you were going to be shorting a stock, that would be a good, that would be a good time to sell shares, because you can expect the price of the stock to pull back and depreciate in price. But down here where it's blue, you can see if it if it down here at 30, when the RSI crosses under 30, that means that it's oversold, so that it's an undervalued stock, where it's it's a better bang for your buck, it's cheaper at that time. And when it's undersold, you can expect a buy rally. You can expect people to be buying that stock when it's undersold, or oversold rather, I'm sorry. So yeah, when it's oversold down here, you can see right here it went for, there was a little rally because it was oversold, and then right here again oversold, and you can see the rally. And as it got closer up to 70, and it doesn't always have to touch 7. Sometimes like right here it's in the middle right now. So that, again, this wouldn't be a stock that I would buy right now, because in its boom and bust cycles, it's only right in the middle right now, and you don't want to pick it up in the middle. You want to pick it up closer at the bottom. Of course, that's the golden rule to trading stock. You want to buy low and sell high. So the only question is, how do you know when it's low? How do you know when you're buying low? Well, this is one of those indicators that's going to help you figure that out. So right now it's right in the middle, or even a little bit closer to overbought. So I wouldn't buy into JNUG right now. I would wait until it gets closer to 30 or closer to oversold, so that I know that it's a better buy when I'm buying, and that it has a higher chance of going for a rally. Again, like you can see in here, it's really simple. When it's over, you can see if it goes under 30, it's oversold, and then it's going to, likely that it's going to go for a run after that, which it did right here. Now that's not always the case. Of course, you don't want to just always look at you can never just look at one indicator and be able to determine if it's a good stock to buy or not. Again, we go over all the ways that we trade on this channel. In this video, though, we're just specifically going over the RSI and how we use it. So again, traditionally you set it to 70 and 30, or 30 is your oversold, your 70 is your overbought. We use it as simple as possible, at the Brantford Exchange, which is pretty much just the traditional way of using it. When it's at 30, it's a better time to buy. When it's at 70, it's a better time to sell. That's basically it. But again, back to, you don't just want to use this one thing. Of course, you have to look at your MACD. Is your MACD pointing up or down? And then, come in here, look at the EMA, look at the SMA, look at the VWAP, which I'm pretty sure the VWAP is the next video to come out. I know that hasn't been posted yet, but we'll break that down in the near future. But this was just a short video to explain RSI to you, and what the RSI does, why it's useful, and why you should use it, and how we use it here. But that's basically it. So thank you guys for watching. Again, if you have any questions, just leave them down in the comments. We'll be sure to get back to you, and make sure to join our Discord chat. We're starting to get more people in there as days pass. We're getting more and more people in that chat all the time, and it's more active than it's ever been. So if you want, go ahead and join that chat. We can, you can discuss with us, and you can discuss with other traders good trading strategies and good habits, and it's completely free. You just join that for free, and all of our links for our socials will also be down there in the comments below, or not in the comments, in the bio below, so you can follow us on that, and leave a like and share if you enjoyed this, if it was helpful, and of course leave us feedback, leave us comments down below, and we'll get back to you. But that's about it for now, and I'll see you guys in the next one. I think the next one is either I think it's after RSI. I think it goes to we're going to explain the MACD, and then we're going to explain VWAP. But yeah, that's it for now, so we'll see you guys in the next one. Thank you for watching.